including NVIDIA's Jensen Huang, SoftBank's Masayoshi Son, as well as OpenAI's Sam Altman, all partners in the $500 billion Stargate AI Info project. Meanwhile, Trump met with NATO Secretary General Mark Rutte at the White House yesterday amid concerns over Russia's military actions against Ukraine. Now, Trump says he canceled the meeting with Russia's President Putin. And the Treasury Department has imposed sanctions on Russia's two largest oil companies, Rosneft and Lukoil. Now, the Treasury is calling for an immediate ceasefire as it targets one of the country's largest sources of revenue. The U.S. government shutdown entering its 23rd day today. This is the second longest federal funding lapse in history. Now, the longest shutdowns have taken place during Trump's time in office. The record-holding shutdown began in December 2018, lasting almost 5 weeks. Now, this current shutdown stems from a stalemate in Congress after Senate Democrats opposed a Republican-backed spending bill that did not include funding for health care and other Democratic priorities. And top executives from firms like Coinbase and Chainlink met with Senate Democrats yesterday. The lawmakers reassured crypto CEOs that they remain willing to move forward with market structure legislation despite some recent pullbacks. Now, the Chainlink CEO, Sergey Nazarov, did note enough Democratic support is present, with more than 10 senators committed to the effort. Coinbase gave out clarity yesterday as a not-so-subtle message to lawmakers. Republican senators and Besant also met with the leaders in a separate meeting. Moving on to earnings, Tesla reported mixed third-quarter results as the company pushes forward in a post-EV tax credit market. Investors are now focused on the next big milestone, progress on Tesla's robotaxi program. Now, the company's revenue rose 12% after 2 quarters of declines, but net income dropped 37% on lower EV prices and higher costs. The company flagged headwinds from expenses and declining software revenue, while highlighting 2026 plans for AI robotaxi as well as cybercab production. Tesla booked a $80 million profit on Bitcoin holdings in Q3. And IBM beat estimates with an EPS of $2.65 on $16.33 billion revenue. Now, growth in IBM's cloud-related business slowed, with sales coming in below estimates. Its infrastructure business saw a revenue decline of 7% as it approached the end of a product cycle. Its Gen AI book of business grew over $3 billion. Big Blue lifted its revenue guidance as it now expects over 5%. And Blackstone posting a double beat this morning on EPS on a $3.3 billion revenue. Fee-related earnings rose by 26% year over year, while its assets under management increased by 12%. Fundraising was robust with continued demand, high demand that is, for its alternative investments. It did see a modest decline in net income compared to last year. And General Motors is rolling out a range of new tech features over the next 3 years, including a built-in AI assistant and a more advanced hands-free driving system. Starting next year, GM vehicles will begin featuring Google's Gemini AI for voice commands. By 2028, the company plans to launch a system that lets drivers take their hands off the wheel and eyes off the road in certain situations. Now, taking a look at earnings from airlines, American Airlines reporting a smaller than expected loss for Q3. Its outlook for the rest of the year came in above forecast, sending the stock higher. Now, it's hiring industry veteran Nat Piper to be its new commercial chief. And Southwest posting a surprise profit for Q3, and it does expect to generate record sales in the last 3 months of the year, thanks to travel demand and higher fares. Now, Google's quantum AI team announced a breakthrough with the Quantum Echoes algo yesterday. It is the first ever verifiable quantum algorithm that does surpass the capabilities of classical supercomputers, running 13,000 times faster than the fastest classical algorithms. And after a down day yesterday for quantum computing companies, they are rebounding this morning. We are looking at IonQ as well as Rigetti Computing and D-Wave Computing. They are in discussions with the Commerce Department about potential investments. Now, the Trump administration would take stakes in the companies in exchange for at least $10 million in federal funding. And ahead of the market open on this Thursday morning, we are looking at U.S. stock futures lower. We are looking at Dow futures pulling back nearly 0.2%. NASDAQ futures are also off this morning and down nearly 0.2% as well. As for futures on the S&P 500, they are nearly flat and hovering right below the flat line. As for the 10-year yield this morning, we are looking at the 10-year currently right below the 4% mark at 3.98. As for commodities and crypto, we are looking at crypto majors slightly higher. In New York morning trade, we are looking at Bitcoin recovering the 109,000 level, and we are looking at ETH up by a little over 1% this morning and right around the 38.50 level. As for commodities, gold is regaining some ground and is up this morning. We are looking at the precious metal hovering right around 41.40. As for oil, it did spike by as much as 5% as the Treasury Department sanctions two Russian oil companies. Right now, WTI is above the $61 a barrel level. For more headlines, let's go across the trading floor to Jane King. Good morning, Jane.
Thanks, Remy. Here's a look at your Coin Street headlines. The cryptocurrency market this year is increasingly being shaped by institutional adoption and the rise of stablecoins. A new A16Z report finds transactions have reached 1% of all dollars in circulation. Part of this growth is being driven by improvements in underlying blockchain infrastructure, with some networks now processing over 3,400 transactions per second, a more than 100-fold increase in throughput over the past 5 years. Well, about a dozen crypto industry leaders, including Coinbase CEO Brian Armstrong and Chainlink Labs' Sergey Nazarov, met with Democrat and Republican leaders yesterday for almost 3 hours to discuss market structure legislation in Washington. Bloomberg reports during the first hour-and-a-half meeting with Democrats that was briefly attended by New York Senator Charles Schumer, lawmakers questioned the crypto leaders about illicit finance and decentralized finance. In a later meeting with Republican lawmakers that lasted over an hour, legislators expressed their support for the industry and the bill. While the UK's Financial Conduct Authority is ramping up its push to police the crypto industry, issuing warnings to unregistered exchanges and seeking legal action against companies serving UK residents or promoting digital assets in the country. The FCA issued hundreds of warnings against unlicensed crypto exchanges this month, including Elite Bit Markets, Nextshare Gainbit, Plux Crypto, and HTX. Well, Chinese artificial intelligence models are outperforming their U.S. counterparts in cryptocurrency trading. That's according to data from blockchain analytics platform CoinGlass. AI chatbots DeepSeek and Qwen3 Max, both developed in China, led the ongoing crypto trading experiment, with the former being the only AI model to generate a positive, unrealized return of just over 9%. Cointelegraph reports that OpenAI's ChatGPT slipped to last place with a 66% loss, taking its initial account value of $10,000 to just $3,400 at the time of writing. And that is the latest Coin Street headlines.
Let's get to the big story breakdown. Well, Bitcoin struggling to hold on to momentum, but back above the 109,000 level this morning. Bitcoin touching its lowest level in more than 3 months this week after reclaiming 114,000. And despite the pullback, Bitcoin does remain up roughly 16% year to date. And Ether also extended its decline, falling to a 2-month low, but we are looking at ETH currently up around 14.5%. And joining me this morning to weigh in is Andy Bear, Head of Product and Research at CoinDesk Indices. Andy, good morning. Welcome back. Thank you so much for joining us.
Good morning.
So we've been seeing plenty of volatility across crypto, especially after that flash crash. So what do you make of where we are right now?
There's a slow money story and a fast money story. The slow money is as strong as ever, right? We see M&A activity. We saw Coinbase purchasing Echo. Yesterday there was an announcement that FalconX, a prominent market maker, purchasing 21 shares, a really well-known ETF issuer that's crypto-focused. We also see valuations for private companies, both Polymarket and Kalshi, those two betting markets. The news stories are reporting very rich valuations for those things. So the consolidation of the business and the growth of the business is slow money. ETF filings, over 150 ETF filings, including yesterday ProShares filed for a CoinDesk 20 ETF right here on the New York Stock Exchange. So there is a lot of building and slow growth happening, growth in stable coins, minting of new stable coins. All of that looks pretty solid. The fast money is where the issues are.
Yeah, so tell us about some of these issues here, despite what we're seeing on the institutional side.
Well, we talked last week at the end, we ended by saying that the market felt tender, and it continues to feel tender. We know what the catalysts are. The October 11th event, I hesitate to call it a flash crash, because these things have special meanings, but we'd say let's call it a super liquidation event. exposed how some centralized exchanges deal with gappy, very gappy situations when they get exaggerated, and that took a lot of the wind out of the market.
Yeah.
The continued closure of the government takes wind out of the market. The fading hope that Clarity Act can get done in 2025 kind of removes a positive catalyst from the market, and volatility is a little higher. So the market's still tender, and what happens when the market's tender is that Bitcoin kind of sags but stays in a range, which it has done. The other tokens tend to fall back. The growthier tokens tend to kind of lose their lift from sustained money, which is momentum money right now and growth-oriented money. So even seeing a little fast money pull out of gold the other day demonstrates that a lot of money is kind of moving to the sidelines.
Yeah, and I think perspective is key here, because when we're talking about some of these pullbacks, especially gold does remain above that 4,000 level and is up over 50% year to date. So that is significant. And even when we're looking at Bitcoin or Ether, they are up double percentage points year to date here. And we're also seeing that in equities as well. So as we move forward, you mentioned the macro. There are a lot of things that are happening in the nation's capital in DC. So what catalysts are you paying attention to as we head into year end?
I wish you can't tell the fast money where to go, right? Over time, look year on date, Bitcoin, Ethereum, Solana, XRP, they're all kind of up similarly on the year. CoinDesk 20, they're up in the teens this year. So that shows kind of progression over a longer period of time. Where's the next catalyst going to go for the next quarter higher? We don't really know. We need the government to reopen. We need some more regulatory progress. We need more announcements. But I think over the long term, the investment case for growth in things like stable coins and tokenization remains stronger and more socialized than ever. So yeah, it's this is turning. There's a phrase in crypto, Uptober, which crypto tends to do well in October. We know that equities tend to sag or experience tumult in October. It's looking more like an equity October than an Uptober. So I would say hang on, mind the tenderness, manage risk, but understand that that growth is still ahead.
And finally, Andy, before I let you go, we have around 60 seconds here. So quickly, that event that happened on October 11th, now that it is in the rearview mirror, how are you digesting what happened?
It was really interesting. It caused a lot of us to go back and reread documentation about how a lot of these centralized exchanges work. Some traditional market participants, and I wouldn't say that I'm kind of in the same camp a little bit, is that when you have exchanges that that perform all the functions from brokerage to exchange to custody to clearing, and they each have their own kind of procedures for things like perpetuals, that investors really need to make sure that they understand the rules of what happens when gaps happen. Crypto is a lot less volatile than it used to be, but there is still opportunities, especially in periods like Friday nights in Eastern time when liquidity thins out, where people have to mind themselves. So standard risk management practices are always a good idea. Perpetuals are a really powerful and interesting, relatively new instrument, so we want to see them flourish, but people have to sort of mind their risk.
Okay, Andy, as always, thank you so much for joining me here at the New York Stock Exchange, and thank you so much for breaking down a lot of the complicated subjects here.
Thanks,
Thank
Freddie.
you.
Thank you.
Coming up next, Vince Molinari sat down with King Lai, founder of Pubrio, at the Hub 71 Impact event in the UAE. Market movers the opening bell. We'll be right back.
Back to Market Movers, the opening bell. Hub 71's Impact Event 2025 took place in Abu Dhabi over the past 2 days. The gathering brought together startups, investors, and strategic partners to engage in discussions about innovation. Now, FinTech TV CEO and founder Vince Molinari spoke to King Lai, founder of Publio. Take a look.
I'm joined today by King Lai, who is the founder of Publio. King, tell us about Publio. I'd love to know about the mission.
Certainly, Publio actually is a global business data hub. Think about is an AI alternative to LinkedIn. Because a lot of companies like fintech, they want to target e-commerce, or AI company, they want to expand to overseas, right? But when they think of a business data, it is hard to find. Think about when you want to find a restaurant, you can just Google search and think oh, I want to have a Chinese food. Then everything is all right. But if you want to find a list of e-commerce, they're doing fashion brand, oh, that's tough. That's why in Publio, what we are doing, actually, we want to aggregate the data across geographic, online, offline, within a single platform. So what we can do is as simple as searching data on Google.
So I love the way you bring it very basic for me back to food and restaurants. So this seems to be aggregating the data to make it more seamless to search and find across perhaps a global perspective. Would that be summing it up properly?
Yes, actually, the main problem right now is finding accurate business information is tough and time consuming. When we think about doing some business connections, we may consider LinkedIn or PitchBook. However, it misses 70% opportunity worldwide, such as when we target the industry like e-commerce or F&B, they are not on LinkedIn. Or if we target the locations like Vietnam or Korea, they have their own local dictionary. So that's why, of course, along with some challenge, including limited filtering, multilingual and incorrect informations. So many people like sales or marketing team, they do a lot of search engine or web scraper, but waste hundreds of time every day. So that's why when they come with us, they can solve this problem seamlessly.
So that data fragmentation seems to go away with your platform, and there's an inherent time savings, which is money.
Yes, certainly. I would say a lot of type of business, no matter they are a brand, for example, like a sales, they want to have a list of a target prospect, or marketing team, they want to understand about the addressable market size, or even a multinational company, if they want to enter another market, such as a lot of multinational company, they want to land in the UAE, right? But before they operate here, they want to know, oh, how big the market it is. So they need to have a reliable business data. So they will come with us and understand, okay, oh, the market is huge. Then it's give them a better decisions. And once they land with in the country or in the locations, then they can use the same data to do the prospecting, to do a better decisions. So I would say as long as AI is the trend of AI is keep growing, a lot of people actually they will ask for some simple questions help me to do a calculations. But I can foresee in the future, oh, if the sales or marketing team, I want to target certain country, can you give me some recommendations? And we will be the data providers and contribute the data to the AI.
So this all goes back to the value of the data and being able to perhaps pull it more seamlessly. So you are the data provider ultimately, is that correct?
Yes, exactly. But I would say we don't compete with any major data providers or analytic platform, but instead, because we are the layer, of course, all those data providers across geographic, they can contribute the data within our data hub. Or on the other term, we will create data clean room, where we will be the one who simplify the assets and also to present in a better way. And those valuable data, I would say the originators, they can gain more benefits in between. So it is a win-win situation. There are no any competition.
So King, I know we're here at Hub 71's Impact Event 2025. Tell us about your experience and how you're working with Hub 71.
I would say it is awesome because when we explore another market, so there are a couple of concerns. first, obviously it's about like the relationship because we are new to the market. We didn't have any customer, any relationship accelerator or are unknown to us. But with Hub 71, first they will like bring the local some Ionic founders who can share like their startup journey, how what's work, what doesn't. Second is about the VC network mingling as well as because Hub 71 is super impactful within like a UAE. So that's why because in the future we actually have a plan to land in the UAE to represent our customer. If they want to like land to the UAE, then we will be the the bridge in between. So that's why with the support from Hub 71, then we can know about the market very seamlessly and very quickly. That will be an awesome journey to us.
Great partner in Hub 71.
Exactly.
Excellent. King, congratulations on the work, and thank you for joining us today.
Thank you so much.
A pleasure. Thank you.
Welcome back to Market Movers, the opening bell. Let's take a quick look at the latest AI headlines with Jane King, who joins us again from across the floor. Hi, Jane.
Thanks, Remy. Here's the latest in your AI Daily Report. Meta will lay off roughly 600 employees within its artificial intelligence unit. The cuts did not impact employees within TBD Labs, which includes many of the top-tier AI hires brought into Meta over the summer. The layoffs are an attempt by Meta to continue to trim the department and focus on the company's AI strategy. General Motors unveiled new technology features that include an artificial intelligence assistant that people can talk to while they drive. Beginning next year, GM says it will offer Gemini, Google's AI system, in both electric and gas vehicles. Drivers and passengers will be able to ask Gemini for restaurant recommendations, directions, and information from the owner's manual for the car. In 2028, GM said it will introduce a more advanced version of the driver assistance software called Super Cruise that will allow drivers to take their eyes off the road when they're on the highways. And a new report from the Global Alliance of Public Broadcasters says AI chatbots make mistakes with news content nearly half of the time. The study looked at how AI chatbots answer questions about news and current affairs and it involved 22 public media organizations in 18 countries. The journalists who did the study found at least one significant problem with 45% of the AI answers. They found serious problems with sourcing in 31% of the respondents, while 20% had major accuracy issues. Well, a cohort of more than 850 prominent figures signed a statement that calls for a ban on the development of superintelligence. Notable names atop the list include Yoshua Bengio and Jeffrey Hinton, computer scientists widely considered the godfathers of modern AI. And that is the latest AI headlines in AI Daily.
Hello, I'm Remy Blair from FinTech TV here at our studios on the floor of the iconic New York Stock Exchange. The world's financial leaders will gather in Abu Dhabi for Abu Dhabi Finance Week 2025. From investment and innovation to global capital flows, it's where the future of finance takes shape. Join us on this journey. See you in Abu Dhabi at ADFW. Well, ringing the opening bell this morning here at the New York Stock Exchange is Energy Vault Holdings to celebrate the launch of Asset Vault, its new asset ownership arm. Now, Energy Vault is a U.S.-based renewable energy company focused on utility-scale energy storage tech. Now, these are designed to enable the global transition to clean power. The company does develop multiple forms of energy storage systems, and they do serve customers not only in the U.S., but in Australia, Europe, as well as Asia. The company's mission is to accelerate global decarbonization by integrating gravity, battery, and hydrogen storage with intelligent software and sustainable materials. Take a look at the podium as the chairman of the board and CEO rings the bell. Take a look. Well, that was the ringing of the opening bell to kick off Thursday's trading session. Now we are looking at a mixed open with the Dow Jones Industrial Average slightly below the flat line, pulling back by about 20 points. As for the Nasdaq Composite Index this morning, we are looking at that index slightly above the flat line, up just a mere 10 points. As for the S&P 500, it is trending slightly higher this morning, right above the 6,700 level. As for the NYSE Composite Index, which tracks all companies listed here at the New York Stock Exchange, that has opened higher, up by about 0.25 percentage point. Welcome back to Market Movers, the opening bell. While in New York morning trade, we are looking at the major U.S. stock averages trying to hold on to gains above the flat line. Well, U.S. stocks did slide midweek as new moves out of D.C. added fresh uncertainty to U.S.-China trade relations. Now, pressure mounted after Treasury Secretary Bessent confirmed that the White House is considering curbs on exports to China involving U.S. software. This does follow Trump's recent statement that export restrictions on critical software could take effect by November 1st. Third quarter earnings season is in full swing with 86% of companies so far beating Wall Street estimates. Now analysts now expect S&P 500 earnings to grow more than 9% from a year ago, up from the forecast at the start of this month. Well, joining me to weigh in this morning is Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex. Good morning, Katie. Thank you so much for joining me. There's a lot going on here, and equity markets have been fluctuating amid trade uncertainty as well as geopolitical tensions and, of course, the government shutdown. So how much weight should investors actually give to these macro risks compared to the underlying strength in equity trend signals?
Well, I think the macro risks are still very important, and that is because the market has been very focused on potential rate cuts. So obviously the CPI data is going to be very integral because if you do see some chances that the Fed might have to pull back, that would definitely be a negative signal for the markets. So I think that's something we're paying attention to and watching. And you're also seeing the US dollar has been bouncing a little bit recently. So you kind of wonder if that's just an indication of a little bit of jitters regarding that macro data.
Yeah, and Katie, as you mentioned, we will be getting inflation figures out tomorrow morning. Some insight into what's happening in the economy at 8:30 a.m. tomorrow morning. But fixed income sentiment has shifted toward rate cut expectations, and we do expect a rate cut at the meeting next week. But could the U.S. shutdown, as well as lack of overall data, create enough uncertainty to potentially trigger a short-term sell-off?
I definitely think so because one of the challenges is we need the data to make policy decisions. And so hopefully we'll have that data and that data will be in line to give enough support for the Fed to cut rates because the market has really already priced in and sort of focused on that. So I think it's more that reaction to a potential that that might not happen that could be negative, particularly for bonds. You've already seen yields up today, for example. So I think it shows there's definitely some risk in reliance on that narrative, and the shutdown just really adds to the level of ambiguity.
And I do want to shift our focus on over to the currency markets. So in New York morning trade, we are looking at the dollar index hovering right above the 99 level. But when it comes to the U.S. currency, we have recently seen that strengthen after a weak run. So do you see this as a temporary move that's driven by some of that rate policy uncertainty that you talked about, or a potential shift in the longer term U.S. dollar trend?
This is actually a really good point. I think the fact that the dollar has sort of found its floor in what's been a very long, weaker dollar trend is something to pay attention to. In particular, clearly the US, growth numbers have been very strong. That's very pro-dollar. But in addition, you have to start thinking if there's some risk for policy uncertainty, that's definitely going to boost the dollar because in general, the dollar has remained weaker with the anticipation of rate cuts. So I think right now the dollar is definitely a tricky one, but there is some chance that we may have that floor on the dollar, that we don't see a weaker dollar going forward.
Yeah, and now I do want to get your take on precious metals. So this morning we are looking at gold up by about 2.5%, hovering right around the 4160 level. And some people have been talking about this recent reversal, but I think it's so important to keep in mind that gold is up over 50% year to date, outperforming equities as well as crypto. So what do you make of what we've been seeing when it comes to the precious metals market?
This is a really good question, and a lot of people are following the precious metals market very closely. And I think given the backdrop of a weak dollar, it has definitely been that sort of go-to hedge against uncertainty, go-to hedge against, concerns for geopolitical tensions. It seems to be sort of the safe haven bet of the year. I think what happened this week was definitely causing some concern for those people that have really been following gold, just given the size of the reversal that we saw. But of course, you're starting to see some strength again in gold. So I think it's really potentially a sign that there could be a limit for how much demand there is for gold at some point. I think rate uncertainty also, is featured into that as well. So gold has been just one of the most interesting trends to follow this year. It's really the hedge against if things don't go well in the equity market.
And Katie, finally, before I let you go, I do want to get your take on the mixed performance that we're seeing in commodities. So whether we're talking about soy or energy, and this morning we are looking at oil higher as well, especially with WTI. But ahead of next week's APEC summit here, what are your expectations when it comes to these different commodities?
Yes, this is a very good point. If you look at oil right now, oil has, really bounced a lot on geopolitical news right now. But to be honest, oil prices this year, for those of us that follow trends in oil, have been very mean reverting. So we haven't seen sort of a breakout type of move in a strong direction. So I think it's been a hard market to kind of time and trade this year. On the other hand, you mentioned soy, and obviously soybeans and the soy complex has been tricky because it is also intertwined in the US-China narrative as well. So we have seen sort of mixed signals across different types of soy products, and I think they're going to continue to have increased uncertainty and, an effect of this particular issues between US and China.
Okay, Katie, well, we will have to leave it there, but thank you so much for joining us this morning, and thank you so much for breaking down what's happening underneath the surface.
Thank you.
Coming up next, Remy Blair sat down with Dr. Stephen Quay, CEO of Atossa Therapeutics. Market movers the opening bell. We'll be right back.
Welcome back to Market Movers, the opening bell. In partnership with Atossa Therapeutics, I sat down with company CEO Dr. Stephen Quay to discuss his company's mission to fight breast cancer. Take a look. October marks Breast Cancer Awareness Month, a time to recognize the progress made in the fight against the disease and to remember that it still affects far too many families. Atossa Therapeutics is on a mission to confront this harsh reality, and Atossa is a clinical stage biopharmaceutical company focused on developing advanced therapies for breast cancer and other breast-related conditions. Now, the company trades on NASDAQ under ticker symbol ATOS. Joining me today is Atossa Therapeutics CEO, Dr. Stephen Quay. So welcome, Dr. Quay. Give us the headline, why Atossa now?
Yeah, so breast cancer is obviously a big problem. We are developing a drug called Z-endoxifen at Atossa. We've now petitioned the FDA for permission to get this drug approved. They will have to tell us what the pathway is. So we're at a point where we have huge catalysts, and with a lot of discipline, we should be able to move forward very effectively in the next 4 to 6 months.
And what does Atossa actually do?
So we're developing this drug called Z-endoxifen, and we have to take it through 3 aspects of development: the clinical development, studies in non-clinical studies, and then manufacturing it over and over again to be sure we can make it at a high quality level. All of those activities are standard for a pharmaceutical company, and we're well into this.
And why should everyday investors care?
Because over the next 3 to 4 months, we will have some key catalysts, both guidance from the FDA on what path forward will be to get approval, manufacturing updates on our process to be sure we're making it properly, and other catalysts.
And in plain English, can you explain what's different?
Yeah, so you can imagine this as a software reboot for an app that you use on your phone. Tamoxifen is the most commonly used drug in breast cancer, and it's been used for decades. What we've done is we've extracted the most effective part of tamoxifen, called Z-endoxifen, and we give only that. So there's 21 things in tamoxifen that are maybe doing mischief. We want to give just the drug that has the efficacy around it.
And a regulatory question for you. So how are you working with the FDA?
Yes. So there's a process called 505(b)(2). It's not a very catchy name, but it's a process where Congress has authorized the FDA to take our data, to take FDA's understanding of tamoxifen, excuse me, and the literature, and put them together to determine safety and efficacy. It's a very efficient path through the FDA.
And I do want to ask you, what should investors be watching out for between now and year end?
So the key point is in December, we'll give you guidance around what the FDA has said about our program, and then I'll be able to tell you on a month-to-month basis in 2026 what we will be doing to prepare to apply for approval of this drug.
And as a biopharma company, if you are successful, what does this mean?
So there's 1.7 million women now taking tamoxifen or its alternative called aromatase inhibitors. And those drugs have significant side effects, which we believe, at least in clinical trials to date, we have avoided.
And of course, safety is key. So tell us about safety so far.
So we've studied this drug in over 700 women, and what we're seeing is very gratifying. The side effect profile is significantly less than the other drugs during these clinical trials. Now, the FDA, of course, will be the final arbiter of safety and efficacy, but at least at this point in time, it looks very promising.
And Dr. Quay, tell us, what's your moat?
Well, the moat has 2 aspects. One are the patents that we have. So we have patents for manufacturing, patents for the drug itself, and patents for how you use it. I've developed 92 patents, and so this is one of the things I'm specialist at. The other are the trade secrets around the manufacturing. We're using a sustainability approach, which is very important for the environment, and we think we're very pleased with that. So it's patents and trade secrets.
And as a listed company, tell us about your balance sheet as well as execution.
Sure, this is really important. So as of the end of the second quarter, we had $58 million in cash. We have no debt, no warrants on our balance sheet, and we're very judicious with and disciplined with our use of cash.
And as with any company, the team is key. So tell us about your team.
Well, so I'm a physician scientist. I taught at Stanford Medical School. I've developed 7 drugs that are FDA approved that have helped over 100 million people, but it is a team effort. So our employees, our advisors are first rate in oncology and in manufacturing and in the process.
And Dr. Quaid, give us your 15-second elevator pitch.
Okay, it's breast cancer. It's a big opportunity. We have great science. We've worked on the biology very carefully, and over the next 3 months, we're going to get clarity from the FDA on our path forward to get this approved. We'd like to replace our drug with the 1.7 million women who are taking tamoxifen or another drug. We have a strong balance sheet. We have no debt. If you want to find out about ATOS, our stock symbol, go to our regulatory filings, read about them, and make decisions wisely.
And how can investors follow along ATOS?
Yeah, so our website is atosatherapeutics.com, and of course you would look at our 8Ks and our 10Ks and our 10Q filings with the SEC.
And what is your word to patients and families?
This is really important. 1 woman a minute while we've had this interview has been diagnosed with breast cancer somewhere in the world. So we are dedicated to get this drug approved as quickly and as safely as we can, of course working with the FDA.
Well, Dr. Quaid, thank you so much for joining me today, and thank you so much for sharing your insights and
It's a pleasure to be here. Pleasure to be here. Thank you, Raymond.
Coming up next, Remy Blair is joined by Gabriela Berospi, CEO and founder of Latino Wall Street. Market Movers the opening bell. We'll be right back.
Welcome back to Market Movers, the opening bell. After new records for the Dow on Tuesday, volatility returned yesterday with the major averages pulling back. On this Thursday morning, we are looking at the Dow, Nasdaq, and S&P 500 trying to hold on to session gains. Now, we are in the thick of third quarter earnings season. Coca-Cola and 3M led the Dow past 47,100 on Tuesday, but 12% revenue growth wasn't able to drive Tesla shares higher. Now, investors will be watching, of course, for tomorrow's CPI figures, the first economic report we've had in a while. Joining me on this Thursday morning is Gabby Verospi, who's the CEO and founder of Latino Wall Street. Good morning, Gabby. Thank you so much for joining me. So we've been seeing back and forth trading, and the markets have reversed course. So what do you make of all the volatility we've seen in equity markets?
Yes, Remy, good morning. It's very interesting, all the volatility that we're seeing, and it's basically uncertainty, right? We have a lot of uncertainty right now because we keep going back and forth about tariffs with the government, with China. We thought we were starting a new trade war, and then we said, never mind. And then we said, oh, actually, it's November 1st. You know, they might get 155% now. It's the tariffs that we're threatening them with on November 1st. But it's not confirmed, of course, and it's just this constant back and forth. And if there's something we've learned about this year that is about to end, is that what has given us the most volatility is this new administration, specifically when it comes to tariffs. So that's been a huge part. Also, the government shutdown, even though it has kind of helped the markets because we know it's a temporary thing and it's not going to last forever, just the fact that we don't know how long it's going to last, that's not a very good sign. When we started this week, the White House said that we should reopen this week. Well, here we are almost at the end of the week, and there's no sign of that. So all of that is not going to help. The earnings, that also brings a lot of volatility. It's very interesting because sometimes we think a company is going to do great, but it's not always so fair. It always depends on the expectations that the analysts have. So it's not always as easy as, oh, if they had great revenue this last quarter, then we'll be in an upward trend for the stock. It's not as simple, and this is where it gets a little bit frustrating and complicated, that it's all about expectations. And that's what we're seeing with Tesla now, for example.
Yeah, and Gabby, you bring up an important point here because last week we spoke about the big banks, and this week we've been hearing from airlines, consumer names, and as you mentioned, Tesla as well. So what were your thoughts on Tesla as well as IBM?
Yeah, so I think those are great companies. Obviously, they're strong companies, but it's more about the expectations. As I said, we had great expectations, especially for Tesla. They're innovating so much, and now we didn't beat those expectations. So even though the revenue was there, the revenue was strong compared to the last few quarters, then unfortunately the stock is not doing well today because it's all about expectations. And it's very similar with the economic data, right? The earnings and the economic data, they work very similarly. That what matters is what are the projections, and are we going to meet those projections or not? If we fall under that, below that, then it's not good for the stock. So I still think Tesla, it's a great company. However, the expectations didn't help the stock today.
Yeah, and Gabby, speaking of expectations, next week, the final week of October, hard to believe, but it is that time of year, and that means we will be getting the Fed meeting for the month of October, and also we will get the APEC summit at the end of the week kicking off as well. But when it comes to expectations and certainty, we are expecting a 25-point rate cut at the Fed's October meeting next week, and we will have that CPI figure tomorrow morning. So what do you think the market is watching out for when it comes to inflation as well as the Fed for the rest of the year?
Well, we want to see inflation under control, of course. Again, it's the economic data, very similar to earnings, all about the projections, right? So when I go on Market Watch, I can see exactly what was the last report of the CPI the previous month, and what are we expecting. We don't want anything above those expectations in the case of inflation, because we don't want it worse than what we think it's going to be. I think gold has been out of control recently for that exact reason, that is forward looking. And gold can see the future, and it can see how this monetary policy, even though it's celebrated, oh, more rate cuts, everyone wants more rate cuts, whether you're an investor or consumer, but that has consequences, right? And we're going to have to live those consequences sooner or later. And those consequences are that this monetary policy is inflationary. So that's why gold has been in a historic rally, and we should continue to see that as we continue to cut more rates, because rate cuts again are inflationary.
Okay, Gabby, well, we will have to leave it there, but as always, thank you so much for joining us, and thank you so much for sharing all of your insights as well as your perspective.
Thank you.
Well, nearly 30 minutes into today's trading session, and we are looking at the major U.S. stock averages moving higher. Starting out with a look at the Dow Jones Industrial Average on this Tuesday morning, we are looking at the Dow trying to hold on to session gains up a little over 25 points on the day. And the Nasdaq Composite Index is higher as well, advancing by a little over 0.4% and is up a little over 100 points this morning. As for the S&P 500, we are looking at that index higher as well, trying to hold on to session gains up by about 0.3%. And finally, with a look at the NYSE Composite Index, which tracks all companies listed here at the New York Stock Exchange, that index is higher, up by nearly 0.4%. That does wrap it up for Market Movers. Thanks for watching and have a great day.